All right, welcome back to another Stock Talk Live. We got Bacon and we got Fabio. Maybe we might have him. We might have him jumping on after he arrives at his dwelling. So, well,
Dwelling.
his dwelling.
His
So,
domicile.
his domicile. So, yeah, no. Fabio from Capital Mindset should be showing up eventually. And we are going to discuss CROX and yeah, all that good stuff. But I guess, the drama in the market today kind of been, I don't know. Well, this has been one of it. Dick's Sporting Goods is destroyed. Absolutely. Just crushed down 25% in 5 days. So, yeah, apparently they're having shrinkage issues.
I was gonna say, did you listen to the earnings call?
Yeah, it was shrinkage
Yeah,
issues. They had a
yeah,
lot
a
of
lot of
shrinkage.
got mentioned a
Um,
lot.
the theft was bad.
Yes.
So, man, no. So Dick's is one that's kind of getting a little bit interesting, and we saw some sympathy moves. Actually, I like if you were looking, we saw a lot of sympathy moves from kind of similar stocks that have been complaining about shrinkage and retail theft. So ASO had a nice move down, almost about 7%. Alta has been one that has referenced shrinkage in their last couple earnings calls, and they were down about 3.8%. This one's getting into kind of some interesting areas as well. Got a video out on this one a while ago. So I'm keeping an eye on this one for maybe low 400s. Target, I think the Target moved down with this as well. Yeah, Target moved down a bit, recovered some. Dollar General, yeah, it was an interesting day. So, yeah. So, what do you think about that? Did you listen to the Dick's earnings call?
I did.
Okay,
Yeah.
give me the like quick summary.
A lot of shrinkage got mentioned. I mean, a
So,
lot. Yeah.
theft.
I could have sworn I heard like one of the Q&A like analysts getting a little like grumpy, or he just happened to sound that way. Where like it seemed like he was asking something to the effect of like promotional pricing discounts and whatnot, and how they'd impact some of their sales numbers going forward. And yeah, management seemed like relatively calm about it. Mentioning how there's only like roughly 10 weeks that are like really big rushes that they got to like hit really hard with, especially for outdoor sporting goods. Um, yeah. I mean, just okay enough. Just a lot of shrinkage.
Yeah.
So that narrative
Yeah.
that I haven't been able to do a huge amount of DD on them. I just casually listened to the call.
Oh man, yeah. I mean, what is it? Yeah, it's down year to date now.
Yep.
So down to
You,
year to date.
you
Closing in
think
on probably 1 year
COVID
lows
lows?
here.
Think maybe COVID lows in the
No,
future?
I don't think. No way. Oh,
Yeah, I
in the
was gonna say.
future?
Yeah.
I mean, that would be nice. So we'll
Treasure
see if it
pandas.
gets there. I mean, over the last 5 years, this is a relatively pretty dang small pullback. But I can't decide if I would want to buy Dick's, or if I would look for like an opportunity, like a um, sympathy opportunity in ASO
Yeah.
over Dick's, because ASO I think is going to have better growth potential in the next 5-10 years. I've done a little bit more research into this one, like the management, kind of like what their focus has been, how they've been growing the business pretty strategically. And yeah, if ASO can get down in like mid 40s, yeah, that would be a pretty interesting place for me. But with ASO as well, it's you just, I don't know, you don't want these companies to just like try to grow, and then they end up losing a lot of those like operational efficiencies. Because as ASO expands out, goes into like the more like northwestern regions, they're gonna have to build out additional distribution centers. So it's just gonna like, they just need to take their time, right? not rush too much, and make sure that they're getting to markets and they're building out these distribution centers into areas that are going to be, you know, make good business economics for them. But yeah, Dick's got destroyed. So, oh my gosh, that was rough. I think I saw an interview with some analyst or fund manager or something like that, and he was like basically calling himself a pig. Like he was like, my price target was 150, and it was at 147. And I didn't do anything. I held on to it, and then he's down like 25% in one day. And he's like, "Well, I'll buy more if it goes down further." Like, oh, but it could be a good opportunity if it does reach some of those pretty low levels. Yeah. So, well, I guess, shoot, man, do you have any? I was gonna try to save the Crocs talk for when Fabio showed up, because he wants us to sell him on Crocs. Why Crocs is such an amazing company, which I said that somewhat sarcastically, just because, yeah. But I don't know what else can we talk about for a little bit. So go ahead.
Oh, there's plenty.
Oh,
Yeah.
yeah.
All right. So, what would you say is your favorite metric or ratio, just to kill time and still give
All
the
of
viewers
them.
value? All right. Well, how about one that's overrated that you think is like
One that's overrated?
yeah, an overrated metric or ratio or
Price to sales.
price to shots fired.
Price to sales. The stupidest metric you could ever make, ever. Like, I will sell $1 for 98 cents, and I will have all the sales in the world ever, like trillions, and I will make you no money at all. Stupidest metric on the face of the earth. Thank you, YouTube Finance. And so I will say, in general, okay, I'm just gonna like rant now. In general, I would say most metrics or ratios that are used for a comparative basis to justify valuations are bullcrap.
Really?
So
not a fan of
I don't like
EV to EBITDA?
Not really. Oh, we might have the man. Let's see.
Oh, there he is.
Fabio.
This is AI Fabio. This is not real Fabio.
That's what I'm talking about. I know, because AI Fabio would be on time.
Wait, but it's the wall AI?
Man. This is flesh and bones Fabio. Shows up 8 minutes late, 9 minutes late, or more.
Hold on, I'm gonna do the Twitch streamer thing. Chat, press 1 if you think Fabio should punch his wall. Type 2 if you think he should headbutt it.
Oh my gosh.
AI Fabio would talk crap about Fuhat. All right. I missed the beginnings parts of Crocs. All right. Tell me, what is Crocs?
We did not even start on Crocs.
Yeah, we delayed.
Didn't even start.
We
delayed. We talked about Dick's and Ulta and
Fabio. I'm seeing a lot of ones.
Yeah, Dick's Sporting Goods, man. Come on.
I'll lightly punch it. Wait, here. I'll even do this so people can hear.
Oh, hear it.
Mr. Gorbachev, bring down this wall.
Was that audible?
That actually kind of was.
Kind of.
There you go.
A little bit.
So now no one can. It is an actual brick wall. This is not fake.
All right. So now it is our job to convince you that Crocs is the most amazing company ever. Is that
all right? I'm here and I have my notebook. I'm here to be enlightened.
Stonk price go up.
Okay. Okay, note one,
ST.
stonk go up. And
Oh,
okay,
NK.
am I speaking to two Crocs bulls?
So I am hopefully optimistic on Crocs long term, but I can totally see why the market would be applying discounts to it, given certain concerns. I think those concerns are potentially applying too much of a discount, and the market really doesn't. I don't know. It's not pricing Crocs like Crocs has any real like long-term steady brand value, or not brand value, but brand that will result in consistent repeat consumers in a lot of the new markets that they're going into. So I think it's a little bit of both. I'm like hopefully optimistic.
Okay, because the main concern everyone always tells me when I'm having conversations about Crocs is what you kind of just touched upon. The brand. Is it a fad?
Well, let's see.
Let's talk about that.
I think there's been multiple periods in Crocs history where you've seen shorter periods of like increased interest in Crocs, but and we'll look at their like long-term 20-year chart revenue and kind of their search history on Google Analytics and stuff like that. But usually what you see and what I've noticed is that typically when Crocs gets introduced to new demographic, there's typically a certain percentage that are going to stick and return with the company as repeat customers going forward. And I don't think, at least with this latest run up, I don't think the market is pricing that in, that they could actually have steady revenue from repeat customers from this latest run up and from their latest, like, I would say, marketing pushes over the last couple of years and expansions into international markets. So without looking at it, what would you say, like, over the last 20 years, how steady do you think like Crocs demand has been?
I would assume because it's in retail, it's like
crazy.
I haven't looked at it. For anyone.
So, we got EL up. Let me pull the right ticker up.
hinting some behind the scenes action.
Behind the scenes.
Yeah. Yep.
It was one of those that I was like, oh, it's down so much. Then I looked at it and I was like, I don't know. Not sure. But so it's kind of like you said, there is some ebb and flow, especially in the initial like 2005, 2006, 2007. But then once we get to this, 2010 area, it's a fairly consistent, like, I would say, like, revenue line from 11 to 2018, which would indicate to me that it's more about potentially their ability to not only expand but improve margins if they have that steady of a revenue stream on a year-by-year basis for something that's quote unquote a fad. When we look at the Google Analytics, we kind of see the same thing. We see the initial surge in 2007, and then we kind of see a normalization, but then we don't really see like a super flatline growth. I'm guessing these are going to be like maybe summer periods of increased demand for their product, and that lines up, right? So search traffic across the world is usually going to increase between March and end of summer. And then in 2018, 2019, where I believe their new CEO came on and they started using new marketing strategies, we kind of see this steady increase. Now, there are two data points right here in 2016 and 2022, where Google changed something on their backend for data analytics for this report, so there might be, this data right here is going to be different, maybe a little bit different from this data, and same with going from 2024 to previously from 2021 back. So I think CROX demand is actually a lot more stable than people realize.
So you think CROX demand is more stable than what market is pricing in? Market is pricing in typical cyclical retail trash.
Yeah.
You're saying it's not really like that. And this is for legacy CROX brand, because now what percentage of Hey Dude is the business now?
Let's see. I think it's a fairly small percentage still. Let's see. See if we can break it down. I know they do have it.
There it is.
Yeah, 26%. So 26% Hey Dude, 74% CROX.
What was the percent growth in CROX sales versus well, I don't care about Hey Dude, just CROX.
Just CROX?
Yeah, just CROX.
Are you looking for the guidance or their last couple of years or what?
Both, actually, if they're together.
Okay.
Well,
so current
Beautiful.
guidance for CROX is 12 to 13%, and current guidance for Hey Dude is 14 to 18%. Hey Dude, now what the market really didn't like, and it's because of the acquisition, right? They acquire Hey Dude. They were guiding in the mid 20s for Hey Dude on the top line, and they revised that down to 14 to 18% for Hey Dude. But oddly, at the same time, CROX revenue guidance went from 7 to 9% to 12 to 13% because they saw more demand than they were expecting in some new international markets that they're going into. So overall guidance, ironically, went actually up, even though the Hey Dude brand was revised down. And part of that revision downward was listening to the earnings call was due to, I believe, not getting enough manufacturing facilities online in order to meet those numbers. So it sounds like they are taking a slower approach with Hey Dude and accepting a little bit lower top line growth in order to keep higher margin, bottom line margins.
What pricing does Hey Dude come in the market? Are they cheaper, normal, expensive?
I would say they're probably around normal.
Normal.
For like a boat shoe, yeah. It's going to be.
Wait, they're boat shoes? Because you see, look, this is perfect because I have no idea what the hell this Hey Dude.
Well, not like a boat shoe. I'm just calling it that. They're like slips, right? So 40, 50
okay,
bucks.
yeah, those are.
Depending.
I would say that's in the cheaper side of things, right? Unless they're discounted shoes, because you go and buy. You go to a shoe store nowadays. Back in my day, this was the normal price.
Oh.
So I'm just cheap.
Wait,
so maybe I'm just holding on to those days.
Yeah. Are you saying that these shoes would be befitting for the quote unquote?
No, I think isn't like the standard price of a shoe now like 80 to 100 bucks?
Depending.
And then if you go to a discount store, you'll find basically like the over inventory will be at like 40 bucks a shoe.
Yeah, because
20 sticks. That's all.
Like if we're talking like high end sneakers that some people still use for relative everyday, then easy, and we can blow past that like $100 or $120 like low end. But yeah, in this case, I thought it was normal, TBH.
Yeah, so it looks like they're around 60, 65 bucks and maybe discounted down a little bit.
Yeah.
Okay, so normal pricing. CROX is cheap though, right?
CROX is not as cheap as you would think.
Yeah, I was gonna say.
Not cheap.
Which is why that's why they have like 7.
Oh, look who's in.
Strong man personal finance.
Yep.
Oh man. CROX my socks. Man, my computer's having a heck of a time keeping up. Because I want to say like 30-40 bucks for a clog.
This
35 bucks
is
for a
what I use
clog.
as my barometer. I go on Amazon
No, are you
because I
going
only
on
shop on
right now?
Amazon.
Oh, okay.
There you go, Crocs. All right, I can buy the normalist. Oh wow, actually that's more expensive than I thought. Wow, I was in my head thinking like 20 bucks.
Yeah.
All right, well,
like
35
let's
take a look at the classic clog.
What?
Classic clog.
People are paying $60?
Nah, they're
No. This is like we haven't even talked about the specialty ones.
oh,
Do you know about the specialty ones?
Batman
Oh my
adjustable
God.
clog. Oh yeah. Oh yeah.
Yeah.
People pay
Have
for
you
this?
seen some of the like like Bacon was saying the specialty ones on
Like
what
limited
is it,
edition.
Shoe X or something like that, or whatever it's called?
Yeah.
Um
Yeah.
like it's like several $100s that these things are reselling for.
Doesn't Crocs also have some shoes that don't look like the traditional Crocs, but they're still the brand Crocs?
Yes, they have like closed-toed.
Yeah, for sure.
Clogs. Yeah, those get priced in the same roughly like 40 to 60 range.
So
you could probably wear those.
you got the fuzzy lined slippers.
Not to mention
you have
gibbets.
the classic clog, and then you have, I think there's like kind of like a sport clog, isn't there? Like
Yeah,
the ones that I got have a slightly different design. So you got the all-terrain clog for you hunters out there when you're going to go shoot a bear.
Sorry,
you can.
What?
Both things are making me laugh. When I'm reading from Strongman and when I'm hearing from you, I have questions for you, and I'm like, what is going on in the chat? You shot a bear? I heard that.
No.
Wearing Crocs?
No.
No, there's a type of outdoor Crocs.
Oh,
I said there's all-terrain clogs for when you're hunting and gonna go shoot a bear.
So why specifically shoot a bear?
Specifically, that's
you don't wear these Crocs
so.
hunting anything else. It's bears.
Yeah. Not to mention Clog Force ones.
Okay,
you got your slippers. I think you got flip-flops too. Did they come out with their flip-flop line yet?
I want to say so. Don't quote me on that. Oh yeah. I thought.
What percentage of their sales is coming from direct to consumer versus like Amazon?
So DTC, they're actually, I think that's the segment of their business that's growing the most. Let's see if we can pull it up here. DTC.
Dude.
DTC growth at 26%. So they're kind of moving more and more towards higher and higher DTC. Amazon, I think like you're never going to get away from Amazon. And all of their lowest prices are going to be, their prices are going to be exactly the same on Amazon as they are on Crocs.com, just because of the agreement. Let's see. So yeah, their DTC growth is around 20% for Crocs and 30% for Hey Dude. I know there. I've seen like, have you guys been in like those resortish areas where they have like a Crocs store, like just a store full of Crocs?
I've seen them in the past. It's been a long time since I've done that.
I saw one in Hawaii when I was there like 2 years ago or something like that. It was crazy. I was like, what the heck? And it was just like, this humongous store, just nothing but Crocs and gibbets with 95% margins.
They sell gibbets, right?
Yes.
For people to express themselves, and people pay money.
Yes.
To put onto their.
So
it's that was another acquisition that they did a while ago, right? And which this I don't get this at all. It's not my cup of tea.
Yeah.
It's not my cup of tea. But if you want to spend $20 on some skulls, You can do that. Yeah, kind of wild.
On the
So
Amazon
I think
note,
these things have something like 80-90% gross margins on them.
yeah, it's disgusting. But on
Go
on
bacon.
the Amazon note, I know it's old because it's the last earnings call, like the upcoming one hasn't dropped yet, but um, they did mention how they've been having difficulties with some of their existing distributors. They're releasing some of them and no longer doing business with them because some of those distributors are violating agreements and doing things on the gray market, i.e., Amazon. So the line from point A to point B hasn't been completely settled yet for CROX's DTC numbers. So we'll see how it all shakes out in the wash going forward. But that is a point of clarity.
So, sorry, I didn't follow that fully. What the problem with Amazon is from Amazon's part or CROX's part?
It's Crocs and the distributors that they sell to, because some of those distributors will take their inventory and list it on gray market, basically Amazon, and they're not supposed to do that. So
Who's supposed to do it? CROX is.
yeah, Crocs
Yeah.
is supposed to have their online. Yeah.
Oh, and CROX is
Yeah.
using the distributors network instead to sell their shoes. on
Well, I
Amazon.
mean, like not on Amazon, but like because
I think the retail distributors. Are you trying to say the retail
Yeah.
distributors are trying to offload
yes,
or
some
are
of
also
their
trying to sell
inventory.
on online DTC,
Yeah.
and
Yeah.
that's
That's a
like
breach of
against
contract.
their
Terms
contract,
of
essentially, right?
Yep. Yeah. So it's something that Crocs is working on. They are aware of it. Not a straight line or clean line from point A to point B yet, but
Well, now you made me interested only because the gibbets business, because I can't believe they found people that are willing to pay $5 to express themselves on a shoe.
Dude, just wait till
So-
you go on the Facebook page, the like Crocs Facebook page with like 80,000 people on it. Like it's
Yeah.
I didn't
There's-
realize like how many
There's
people
80,000
buy this stuff. It was something like that. I looked
gibbets.
it up the other day, and it was like I think they had like 40,000 members or something like that. It was crazy. But what I when I started looking into this a while ago, you would have like YouTube channels dedicated to Crocs,
Mm.
and then these
See, that's a
people would be buying
concern
like
for me.
20,
Oh,
30.
sorry. We're talking about the product itself. We'll talk about that later.
not
Okay.
not
Yeah,
stock.
no, we're talking about
players.
the product itself, right?
Yeah.
And what I've noticed is that a lot of people seem to be I don't know, like collecting them almost. Like they'll get their first pair and then they'll get another pair and then they'll be like, "Oh, a special edition of something like that I like Batman. Oh, I should get that pair." And then just repeat. uh see we listened to Staccato. My mom paid $15 for accessories with Crocs.
My gosh.
So that's probably the gibbets, right?
That'd be my guess.
Yeah.
Okay, so there's more to it. Now let's get into like I guess the main concern people have, and one that I penciled out again, surface level, but I want it to be explained. So let's talk about Hey Dude, right?
Yes.
What happened there? Walk me through it, guys. Like, they did this acquisition. What was their reasoning for this acquisition? What'd they pay for it? And I'm gonna just go down from there because then there's follow-up questions.
Wait,
Bacon, you want to go over?
before
You want me to?
no. Yeah, before we even start, I'm just gonna ask: do you actually like do physical like pen and paper?
Yeah.
Oh, okay. Like I didn't realize that was still a thing that people did. I thought like some people would just only be like, "All right, here's my Excel spreadsheet." Do.
No. This is just more qualitative notes. Quantitative notes I'll do later, but qualitative notes for now.
Alrighty. Yeah, and I'll defer to you, Jesse.
No, if I remember correctly, the price tag on Hey Dude was like $2 billion. Is that right?
2.5.
2.5.
2.5.
Off of what?
So
Off of what
2.5 billion. Sales at the time, I would have to look into that. It was a pretty dang high multiple. It was a high multiple, and Hey Dude was growing at like something like 50 or 60%. It was something crazy like that. But sorry guys, my monitor keeps on blacking out on me. But I know it was a very very high multiple.
5x sales, yeah.
So about 500 million in sales at the time of acquisition.
Yep.
Yes.
Okay. Growing at 50, 60%. I guess we don't have the EBITDA figures for that one. Unless they broke it down, that would be awesome.
I don't see it.
My guess is we'd have to dig into pro forma, and the last misadventures that Hayden and I had with pro forma were mixed.
Yeah, so we have $2.5 billion sale price, 50 to 60% growth at time of acquisition, revenue 500, given a revenue multiple figure of 5. That doesn't really tell me the full picture. They'd probably look at the I need to see the EBITDA figure if that's available, or get some estimation. But that's just looking in the past, rear view mirror, judging management on the acquisition. Acquisition happens. That's behind us. They did it mostly with debt?
Yeah, it was debt raise, I believe.
Yep.
I think there might have been a small
my
amount of shares.
Yeah, my eye caught a number. It was like 2.05 billion in the announcement.
Let me see here.
There it is. Will be funded by 2.05 billion in it was cash. So my eye
cash
caught that.
And 450 million in CROX shares. Yep.
So then the debt was, we expect to enter so $2 billion loan, 2.0 billion, and then that took out just 50 million in cash on the balance sheet that they had, and then 450 million share dilution, but they've bought back all those shares.
Yeah.
From my understanding. And did they buy it back at better prices than when they issued it at? When that $450 million was issued, was that at if you go to the stock, CROX stock, wasn't that at the peak 2021?
Let's see. So when was actually, when is this?
Scroll to the top.
Oh, whoops.
July 27th. Nope.
2023.
Yeah, I was gonna say no way.
December 23, 2021.
Yeah, Hayden says no.
Right around here.
Yep.
Okay. Well, just kind of estimation. Okay, issued after. Okay, so my question, well, it's not like the biggest deal, but it'd be pretty awesome if they were able to issue it at much higher prices, and if they did the bulk of their buybacks on that dip. Which is my question to you, gentlemen. Do you know if that's what happened?
So unfortunately, I believe they paused their buybacks right after the acquisition because they were focused on bringing down their debt. So most of their buybacks, if I remember correctly, they did a ton of buybacks in 2021, which was this huge run up. And we can kind of look at that here. So let's see.
They bought back high, Hayden says.
Yeah, they bought back high. So common stock repurchase, the bulk of it was basically at the highs.
Dang.
In 2021. And I'm guessing they timed that specific purchase with the issuance of the shares. Because that looks like the last quarter in 2021 when the acquisition would have been going through, and that would have covered probably the dilution you would have seen from the acquisition. But most of their share buybacks, it looks like it started probably the last quarter of either the last or the third quarter of 2020. They had pretty heavy buybacks up until the start of 2022, when they had shifted all that cash flow going towards debt repayment in order to get their leverage levels lower. And we can see that here. Debt obviously shot up about 2 billion in the beginning of 2022, and then instead of buybacks, we just see deleveraging of their balance sheet.
Funny how that works. They spent all that money buying back shares. They could have just had that cash in hindsight for an M&A opportunity and take on less debt.
It's true. It's true. And so if we look at the stock price, most of that repurchasing was going on probably right through here.
Mm.
And with a big bulk purchase, like probably around in December sometime.
Oh my
or
God.
In the Q to basically cover what they were going to dilute, it looks like.
Hayden. If Hayden were on this panel, Fabio, you would be like, you would channel your inner Shark Tank. You'd be like, and for that reason, I'm out.
The other period of buybacks looks like it was probably mid 2018 to mid 2019. And that period would have been, yeah, basically through here.
Okay.
So those buybacks, I'm sure, look good right now, or especially after they started running. I'm not sure if they have a structure in place for targeting buybacks, whether it's a valuation structure. I can't recall on that. If I don't know if they do, or it's a valuation structure that's really like, I don't know, they're always going to be in it because they trade really, really, really cheap.
Mm-hmm. Yeah. So right now, I guess we'll get into valuation on a high level. I think I should have started with this. Both of you, I assume, think right now this price is cheap, correct? It's optically cheap. Let's call it.
It's optically cheap. It could be better.
It always could be better.
So, no,
I'll give you a stock.
It's
for
hard
free.
because
yeah, please.
The thing that I always struggle with this one is how much of a discount do I want to apply for the perceived risks that it has, and like what is the market going to discount that at? Because I have a pretty high like target rate on my return, like 20%. But I'm trying to kind of get a feel for the discounts that the market's going to apply, assuming that the market thinks it's going to be a fad or it's going to tail off, right? And I think that's what the market is perceiving, for sure. Now, that gets really interesting because if that doesn't happen, then, you know, like if CROX has steady growth for the next 5 years, let's say, and let's just say it's nothing even crazy, like it's like, you know, 8-9% growth for the next 5 years or 7% growth for the next 5 years, but somewhat like stable, and they're able to continue to improve their margins or maintain their margins. That's when I think this company looks stupid cheap.
Okay, so you're penciling out modest growth, single digits, high single digits, margin maintenance, even slight expansion, maybe in Hey Dude, as they improve that operation. Then you think it's cheap, if those following facts are true.
Yep.
Okay, so I would say that would be optically cheap.
Hayden says fair price, not cheap today, just fair.
What is may I ask, gentlemen, what are your cost bases?
Not great, Bob.
Not great.
You want me to start or no?
I'm putting notes on this. So bacon, what's your cost basis?
$91.25.
Oh,
had a
that's
limit
lower
order.
than today.
Yeah, had a limit order and it tripped.
Oh, dude,
Jesse's like $5. I've been investing.
You're way better than me, man. So I my first round in CROX, I think I had a cost base of about 75. And I ended up getting all the way out of it and like trimming a little bit up and then getting all the way out of it. And I want to say the high 120s to 130s. And then I just took a stab at reestablishing a position. My current cost basis is like 107.
Hayden says his is 102.
I already wrote his down. Don't worry.
Oh, okay.
I saw his.
Hayden
I was like,
102.
Yeah.
No, I have all your names here now. So Bacon. Well,
Yep.
Jesse and Hayden, you guys have been in and out of this company, growing your position, shrinking your position. So your effective cost basis over its lifetime is like your net realized value is probably positive.
Yeah. Oh yeah. I think. Well, shoot. I don't want to look now, but.
Oh, Kale. All right, Kale, you're going on my list. Why not?
Kale.
I'm gonna remember you, Kale. So when I see you, I'm gonna be like, I know what your cost basis is. Don't know when that's gonna be useful information for me, but I shall keep it in touch. All right. Julius says, don't forget the popular investor.
If you subtracted the gains that I've already taken from CROX to my current cost basis, it would be significantly lower. So
okay, well, Julius bought it at $10. All right, JC.
Julius, $10.
He probably sold puts on it, and then that's how he got it that way. Because he watched the YouTubers who told him selling puts. So he sold puts, got it for $10.
Criticized by category, not by name.
Yeah.
I see what you did there.
Only those who know will know. All right, so yes,
But
I'm going to track you.
The
Kale.
price that I think for me this looks very interesting is around 80. Like
around $80 a share. All right,
Yeah.
so I'm going to do no further due diligence. I don't want to speak on this any further. I'll wait for $80 a share.
Oh, wait! But you didn't hear Jesse's disclaimer. And
No,
Jesse,
there's no disclaimer. There's no. It's going to 10% immediately. My portfolio.
This is the Stone Cold.
It's going to
Investors
10% or 10x. Like,
yeah, it's either going to be 10% of my portfolio or nothing at all. All right, Bacon. I come here. I come here to play hard. I don't come here to dilly dally. All right, so you have an $80 target acquisition price where you would make it what are you looking for in terms of allocation?
Man, at 80, I would probably bring it up to like 5%.
5%. Those are rookie numbers. We got to bring those up a bit.
Okay, 45.
45%. That's more like it. All right, 45. I convinced them. All right. No, but in all seriousness, okay. So $80. That's your. You'll be patient. If it runs away from you, that's fine. Okay. I really like, by the way, the one business I really like is the Gibbets business because it's like how they've convinced. So like Crocs can have future value. Like if I sell you a Crocs shoe, it can produce value in the future by selling you these Gibbets.
Yes.
It's a platform, Fabio.
Yeah, it's literally a platform of expression. It's a social media company.
Individualized.
Yes.
You're posting your thoughts on your shoe, paying for the pleasure of doing so.
Yeah.
And then you're telling me there's a community dedicated to this, like a cult following of sorts. But all right, so you walked me through the fad point, and I guess we'll go into some of the bearish sides. So like my devil's advocate, and I want to see your responses to it. Okay, you've already addressed the fad claim, so I'm not going to rehash it. I want to see how you guys feel about the popularity of the stock among retail. I know that in and of itself is not evidence that it's terrible. We shouldn't use that logic because, even the old saying goes, a broken clock is right twice a day, right? So people can be right for the wrong reasons. And then the wrong, or not the wrong people, but those people being right for the wrong reasons and giving you the wrong reasons might discourage people from investing in X in the first place. So how do you guys feel about just like the overall popularity? Does it put you off? Does it make you cautious?
Did you want me to go, Jesse, or?
Yeah, go.
Well, I personally hate it. I don't know if you saw a post on Jesse's Discord, but I actually said, as much as I love both of your gentlemen's respective Discords, if the CROX cost basis or cost action doesn't get lower, I will hold both of your Discords responsible.
Is the CM Discord buying Crocs en masse?
There's at least interest. Like I know there's some other users that are interested.
I get questions, and I know why those questions come from, because there was an overlap in audiences between myself and the popular investor.
Oh.
And so when he gets into a stock or when he has interest in a stock, I usually notice increased uptick in interest and requests. So I wrote you down: bacon, hate, exclamation, exclamation, exclamation. All right, Jesse, how do you feel? I'm like your therapist.
I'm trying to accommodate somebody right now. I zoomed in for you guys. I'm a little indifferent on it. Sometimes I really like it because typically you can get a feel for the emotional side of the investor base that is looking or really passionate about a stock. And sometimes those emotions will swing really high and then really low. So while I do really like also finding companies that like nobody really talks about, you don't have to really worry about that side. But I also recognize that potential opportunities can come from those very drastic emotional swings in retail investors.
Okay, and out of curiosity, do you know maybe what percentage of the float is invested by retail? It's nothing like these other really popular stocks, I'm guessing.
I don't know. No, I don't think I know. We can look for it, but I'm not sure off the top of my head. All I know is that there seems to be a pretty good following on different media platforms for CROX.
Do you have a preferred data source?
And my preferred data source is when I post a YouTube video and I see the search traffic for the different stocks that I post.
Plenty fair.
And no, like actually though, it is pretty interesting looking at going into YouTube analytics and doing research on different stocks in YouTube analytics to see what the search traffic is like. YouTube is the second largest search engine behind Google. So you can usually get a pretty good sense for what type of traffic is coming from, the general population towards different stocks on YouTube.
I love Hayden's commentary here. Can't wait for it to crash so the jokesters sell it for L's. Well, I saw a retail investor posting his portfolio. I think the subscribers have taken a liking to calling him Mini Bubbleson. And he allocated somewhat, what was it? 48% of his portfolio now to CROX. He sold Amazon, went right into CROX, I saw. So,
and that was at like 140 or 130, right?
No. It was actually it was recent, but he had already been purchasing CROX prior to this moment, and so the person's portfolio is like CROX at almost half, Dropbox.
Degenerate calls.
I'm not even counting that, but it's like a 5% position. Then the other one, it's Dropbox. I forget. I'm going off of memory. PayPal.
Yeah.
All of them are retail stocks. And my issue with Dropbox was its initial, I mean, it kind of fell off the face of the earth in terms of his attention, which made me happier. But it was a you know who stock at one point. Unfortunately, I found that out later. And PayPal is obviously has a lot of attention right now. And then now CROX. So it's all really high interest retail stocks, that individual portfolio. So you guys think that there's potential pain. I like what Jesse said. Jesse, to quote you, you like it a lot because of the emotional aspect that comes with all these retail investors. So you're expecting volatility and you're hoping for that. And so is Hayden over here. Hayden's like, I held that MF at 46. You can't break me. I remember I have a video of it at around there. I just said it was extremely cheap. I should have bought it, but I didn't understand it. I don't like retail.
That was like my bearish zone, I think 48, I think was, or 50. So it got down there, and I had already accumulated too much, and I didn't want to take too big of a position. So I bought a little bit more. Got my cost basis down into like low 70s, I want to say. But yeah, that was a brutal sell off. The thing so when it ran up and I sold it, the several things that I wanted to see was I was really concerned, not necessarily about the top line sales for Hey Dude, but I was really concerned about their margins going into a merger and trying to incorporate Hey Dude into the playbook that they've essentially made for Crocs. So personally, when I saw the Hey Dude's guidance dropped, but their margins increase, I was like, I will take that all day. Like that, I would much rather see them strategically, hopefully pull back a little bit on top line growth plans, in order to expand margins and get better bottom line margin going on the brand.
Yeah, I see. You prefer efficiency over just growth for growth's sake. I agree with that.
Yes.
I saw, and I had these questions. We already talked about them, but I think it's fair to mention them to the audience since it's live/recorded. You mentioned to me off camera at one point in a conversation, the CEO comes from a consulting background, pretty much in this kind of strategy that he's implementing at Crocs, which is awesome. That's a huge plus. You pointed out earlier in this live stream that when he took over, you see a change in direction in the interest. I think that was in one of your graphs. I think it was the Google graph. Yep. So he took over. When did he take over exactly?
I want to say it's 2018 or 2019.
Oh, literally.
We could.
Yeah, you can.
Yeah, we can look it up real quick. Or Hayden probably knows off the top of his head.
Is Hayden like the foremost expert in Crocs right now?
Yeah. Like
I would say so.
Know,
I mean, I look at too many things and I forget stuff all the time. So I'm like, I think that's it.
2017. It says 2017. Yeah.
My gosh, he has it literally. It's like 2017.
Yeah. He doesn't forget anything. So basically, the first kind of breakout in search from the trend was going into 2018. So yeah, that would have been like right as he was getting ramped up, probably.
I love how Hayden just comes out with the second fact. He was a consultant for Crocs between 2013 and 2014.
Yeah,
that is correct. Yeah, he not only consulted for other, I think it was shoe companies specifically, but he was a on and off consultant for Crocs over a decent. I thought it was more than just 2013, 2014. I thought they brought him in at like 2 or 3 different points in time. I might be mistaken though.
Hayden, while you're at it, can you also send me his home address, phone number?
Social.
Social would probably be awesome too. If you could just email
office
that
badge.
Over to me. Yes, a picture of his office badge barcode. Go look it up and see what changes. Wait.
Yeah, he's talking about the C-suite, how it's changed over time, and how each level or each officer having been changed has like really improved, and it's shown. Like even marketing, like when they've gone with exclusive limited edition runs with certain celebrities, it's been scary.
Wasn't
because their CFO is relatively new too, right?
Yeah, I want to say so.
Isn't the CFO from Amazon, or is that the COO? Worked at an Amazon business, not Amazon parent company, but a subsidiary of Amazon.
I think so. Actually,
I can't remember if that's the COO.
No, I think it was. I think it was the CFO.
I think you are right though.
Un momento.
Let's just go to LinkedIn.
I was just pulling up the Crocs website, like their investor relations. Yeah, good
We don't
old
care
Ann.
about their website.
Yeah, good old Ann was CFO for Zappos.com, which fell under Amazon.
Okay, so she got relative experience.
JC.
So pretty much the thesis here is you have a business that's being relatively mispriced because of genuine concerns or relative concerns of the sector that are maybe overly applied here. You have a strong margin business, Crocs, legacy business, still growing relatively well, 12 to 13%, making up 74% of the business. You have Hey Dude, sales have come down, projections have come down, arguably why the share price sold off. Still producing strong margins, strategies focusing on maintaining margins, not so much growth. And pricing positioning for both of these companies is in the normal, let's call it normal pricing category. Crocs has another business adjacent to Crocs in the same, I guess, umbrella, the Jibbitz business that you could argue relies on the growth of Crocs to shoes sales, because then people will buy the Jibbitz, but insane high margins there. So you got something good here. What are competitors looking like? So why Crocs? I went on Amazon and immediately I saw a knockoff put right next to it.
Was it dog?
No, it was in pin. Yeah, sorry, in min pin.
Bless you.
So
And bless you.
So yeah, I'm at the point now where I'm like, if knockoffs haven't destroyed them yet, then I really doubt that they're going to be able to. Like, I feel like the brand in itself has almost proved itself out to be a little bit resilient to that. I think it was like going back to, what was that?
Well, I said, well, also, maybe some also what Hayden and Julius are saying. See their comments there.
Yeah. Now I did find some that claimed, or that some articles that claimed that certain knockoffs use the same material. Specifically, the knockoff that I found was like, how good is that? Dogs, man. So this company has been around for a long time, and they have been in battles with Crocs back and forth for a while. They eventually, I believe, lost in 2019. But in doing that research, I think it was like going back to 2004, Crocs has had like over 20 or 30 lawsuits against various companies knocking off their stuff. I think if people wanted to buy knockoff Crocs, like, it's very easy to do so. If it hasn't, I don't know if these actually use the Crosslight material. I saw kind of conflicting reports on that, but I am less worried about knockoffs now, just because I think if knockoffs were going to be a threat, we would see that in the previous data already. Like, it probably wouldn't just come out of nowhere, like nobody's trying to knock them off type thing. There already have been numerous knockoffs trying to steal that business. And just because you can knock something off doesn't mean you can knock it off at the operational efficiency and the margins that Crocs can do it at.
Okay, that's a satisfying answer. But the thing is, I think it's going to probably go to zero anyways, because Jake actually wears Birks.
Oh, well, who cares what Jake says?
Dang it.
I'm joking. I love Jake.
K-Pod says Walmart Crocs are $10. Haven't broke on me yet. So I'm assuming, though, it doesn't feel as nice. Are Crocs comfortable? I'll just buy one just to feel them.
They're comfortable. Yeah.
Wear them for a week straight, return them.
Yeah, for a week and then return them. I think, like, honestly, I think there probably are a lot of knockoffs out there that are like being worn. But like I said, I'm not sure like that's not going to be your market that you grow from. I don't think you're going to be growing from the market that is kind of targeting people that are going to want them for the brand slash. I have a hard time calling it like a fashion thing, but like fashion customizable stuff. Um, I just like I don't know it. If there have been so many knockoffs already handed or like trying to squeeze them out, and we don't see that really happening, I lean more towards they're going to be able to fend off knockoffs than they're going to be threatened by them.
Okay. Okay.
Yeah, uh, I don't know if Hayden missed my comment. Hayden did mention a risk that I actually was concerned about being China. Now, the last time I listened to the previous earnings call, it seemed like me reading between the lines, Crocs sold to China, being the distributors, but not really having so much of a store presence in China. Now, I don't know if I'm misinterpreting what you said, Fabio, in the past of, you want a company that sells to China, not necessarily sells in China. And either way, it's going to be a risk no matter what. A revenue stream is a revenue stream, of course. So I don't know if there's risk mitigation there or if that plays into anything at all. Yeah, okay. Hayden says sell to China. So I mean, it could be a risk, but maybe it's a risk that's somewhat managed ish.
That's so smart of management. They might know. They might have looked at it and were like, "Yeah, we'll
Yeah,
sell to
because
China, not in China."
yeah, like there was another earnings call, so where I listened in closely, where I was like, "All right, let me see how your Chinese operations are." But
I would
anyways,
agree with Kale's comment because they don't really. Well, actually, one of the Hey Dude's shoes looks pretty good. You know, I'd wear
yeah.
these boots. They're like not $100. Get like 15% off. Look at that. Yeah, yeah, I'd buy it. I just don't know how comfortable they are.
I don't even have Hey Dudes, so maybe I should do some market research.
So
Yeah,
I was
And
gonna
I'll base
say,
all of my investing decisions off of that. If I
watching
get
people in
these
the
Hey
shoe
Dudes and I
aisle.
don't like them, I'm shorting the stock.
Hayden's like, I have Hey Dudes. I have Hey Dudes. I have Crocs. He has Gibbets.
Want to see my Gibbet collection?
Oh my. I
Uh,
think you guys answered all my questions there. I mean, with Crocs, okay, I'm getting it. I guess let me think of the other concern because I think there was one more. You addressed the fad one. You addressed
Mhm,
knockoffs.
mhm.
You addressed the retail excitement around it. The debt load. Okay, so they took on all that debt.
mm,
They're able to, I guess, service that debt easily. Correct?
It should be. I mean, based off of
yeah.
the trends that I've been seeing, that they've already been putting in work on deleveraging. Um, that being
Yeah.
said, though, Hayden is a far better analyzer of debt than I am.
I have a question because that's my. If I had to ask management, why buy the Hey Dude business at all?
So, from what I've gathered, uh, it's obviously an expansion into a different type of footwear.
Hmm.
But from what I've gathered, they saw the opportunity to implement similar, like, um, factory creation distribution playbooks with that type of footwear as Crocs. And then there was also a big popularity thing behind Hey Dude where they thought they could grow it. So I this comes back to like why I sold a while ago. I really was concerned that Hey Dude would kind of mess up the beautiful operating efficiency machine that they had created and the distribution networks that they created, and they weren't going to be able to integrate that as well with that type of production as they could with a simple like cross-light foam based shoe. I think if they are able to do that, and which we've seen now that they're doing a better job of that than I was originally expected. And at the same time, I wasn't a huge fan of them taking on that much debt and their margins possibly being impacted long term. Now that those two have kind of subsided, I feel at least like a lot more at ease with the acquisition. I don't think like they're never going to be able to get Hey Dudes to the type of margins that they can get Crocs at, because it's just so freaking cheap to make those. But the margins that they have been able to get Hey Dudes at have been pretty impressive.
So I think
their margins improved. Like, go ahead.
You had a comment from Hayden that their new market and greater, why the word greater ability to expand long term or to scale than Crocs. Why can it scale better than Crocs? Because I feel like what Hey Dude is getting into is way more competitive than Crocs. And I'm almost more afraid of the fattiness of what Hey Dude's in. Because, well, to be honest, I didn't even look at Hey Dude. I thought for a moment that they were like a competitor until recently to, well, because I never even went on their website, to Cole Haans.
Oh, okay.
Because Cole Haans are, you know, they're awesome shoes to like kind of be active work, right? You wear them in the office and you can kind of do activity. They're like not super formal, but they're not informal. So, anyways, I don't know.
Cole Haan is a much higher price, right? If I remember correctly.
I forget what they're selling for, but I think I want to say like 100.
Yeah, I was gonna say like 100 to 120, maybe.
See, this is how I'm bad with this like industry. Okay, so they're not even, I know they're not comparable by the way now, but prior to previous conversations, because I never even went on the Hey Dude website. So I like this because I'm just basically can think of me as like fresh.
Yes.
I know Crocs obviously, but I don't know Hey Dude. So who is Hey Dude competing against? Like, what is a direct competitor against Hey Dude?
Let us know, Hayden.
Allbirds.
Allbirds?
I'm joking on that, by the way. Are they even still operating?
So when I first saw Hey Dudes, I thought of what's it called? Is it Sperry?
Oh, I know Sperry's, but how much are Sperry's? I don't know how much Sperry's are.
I don't even know if they have.
Someone's saying Skechers. We have two Skechers.
Yeah, Hayden says what JC said. Kale also.
So no, I know Skechers to be a cheap shoe brand.
Yeah.
Right?
Yeah, and I was gonna say, like, aesthetically, I got Vans, but less skater marketing, if that makes sense.
Oh, whoa! Look at that. It's the Skechers Crocs. Oh, Skechers is publicly traded?
Yeah, I thought they were.
Yep.
Comment section is
SKX.
very lively. Yep.
So we have comments saying it's coming from Vans, Sperry's, and Skechers. Those are the competitors to Crocs.
Oh,
I'm so sorry, to Hey Dude.
Yep.
Who is that?
The great Dr.
Snoop.
Bombay.
It's your boy Snoop.
Oh, he doesn't. Yeah. He looks different there. Just don't buy. This isn't your thing.
Yeah.
Fabio's used to bespoke shoes. I do love watching Kirby explore the bespoke world. It is very entertaining sometimes. Hayden, we're not getting into that. I don't think unless that's what this is going to turn into. But I came here for the Crocs. Okay, I came here to learn about Crocs.
For the Crocs.
Yep.
So something that I noticed is that it looks like I saw a slide on Hey Dude's operating margins like declining a ton, but I knew that I saw a slide also on increasing gross margins. I had to dig it up, but let's see. So Gap Crocs. So yeah, Crocs gross margins is at 61.9%. Hey Dude, they've increased the gross margins 15 percentage points basically from 2022 to 2023, from 32.4 to 47.1. Now I have the question of like, okay, so if their gross margins went up so much, why does this other slide show their let's see, operating margins tanking? Where was it at? No, this is gross margins.
Oh, do you mean their net or
Adjusted operating margins?
oh,
Q2 2022 32%, Q2 2023 27%.
Wait, is this the presentation for the upcoming quarter or earnings call or last?
This is Q2. This is Q2.
Oh yeah.
2023 Q2.
Yeah, duh. Sorry, being dumb here. I want to say that I don't think it's the adjustment necessarily, but like this might be relevant going forward. They said that for Hey Dude's SG&A going forward, that it will still stay a little bit more on the elevated side than what they'd like until they build everything out that they want built out. So that's just something to look for the next handful of quarters to a year, roughly.
Okay. Interesting.
Yeah. So, I mean, maybe that might be playing into the operating accounting, but
yeah, that would make sense.
Yeah.
Because
we would be talking managerial, not financial, I think.
Yeah. No, I just had to answer that for myself because I was like, I swear the gross margins went way up, like increased really nicely year over year. And then I saw that slide in the operating margin. I was like, what the?
Yeah. See, there we go. I provided value with my noobish level, like learning accounting skills or lack thereof. This is where Fabio yells at me. It's like, no, you're wrong.
You're wrong. How dare you think you're right?
SG&A has no impact on managerial accounting margins.
I just noticed this whole time you had a goose behind you.
Oh yeah, let me reposition myself.
Yeah.
Honks. Yeah, not
honks.
stonks. Yeah.
Yeah, that was stonk. It's honk.
Yeah.
Okay.
Stonks. Yeah. You should make it stonks. Yeah. Stonks.
My fat body gets in the way. But...
Oh man.
Yeah, so SG&A will be a thing. Like if anyone's putting that in their thesis going forward, short term, don't. At least that's what management is saying for Hey Dude. Yeah.
So, what's their current stock buyback authorization?
Was it 2 billion with 1 billion left, I believe?
I want to say so. This is where Hayden yells at us and says we're wrong.
Dang, yeah, they spent a lot of that buyback at really high prices.
Yeah,
unfortunately.
It is unfortunate, but depending on how things go going forward, though, with the balance sheet getting deleveraged, like that just means opportunity going forward.
Well, before we criticize them,
yeah.
Before we criticize them because prices were high, what were their like their net yield at the time was between 7 to 9%. Free cash flow yield was between 5 to 6. So yeah, probably you could say a bit high, especially for apparel company. EBIT was probably 4 to 9.
Hayden wants you guys to know that you guys should realize that 27% margins is unreal in this space. He says.
Yes. No. The other thing that I looked at with this company was their inventory turnover ratio, and best I can see as far as like from an annual and from a quarterly perspective, their lowest that they ever dipped was like 3.44%, and like the average was like roughly 4 point change. Like, so if you have that type of margins with this relatively elevated turnover, like, because when I see these margins, I think to myself, all right, you're a retailer, I expect, low turnover ratio, inventory turnover ratio, and like, it's still has some efficiency there. Like, yeah, I wouldn't be surprised, Hayden, if it turns over to 4 and is in line with previous year's range, even with the merger. So that's maybe my headspace is in the wrong direction.
No, I mean their margins are impressive. Like there's
yeah.
like I wouldn't be seriously looking at this company if their margins were probably what normal apparel and retail was, right?
So you're not buying Abercrombie and Fitch.
What?
You're not buying Abercrombie and Fitch.
No. Maybe I should have. Maybe I should have. I was looking at it when it was like probably 18 bucks a share.
What is it now?
And I want to say it's like 45, man.
Oh, I know they did a turnaround.
It's A&F. It's A&F, right? $41 a share. I was actually really looking into it right in this area, like down here. And I was like, I don't understand it enough. And I looked at it the other day and I was like, what the heck?
Should have understood it more.
Yeah, I know.
Okay, so all in all, I mean, I'm more liking it. I saw that there was a comment above something the popular investor, is he still heavily invested here?
I think I don't follow him. From what I've heard, I want to say he got out and he recently just bought back in. So yeah,
he bought back in a
whatever
heavy
you
position,
will do
he
with
bought
that.
back in like I want to build it out again.
I think he bought back in as in building it out again.
Okay.
Hayden could tell us that too.
Oh my God. Just bought back.
Yeah.
Okay. Yeah. Hayden's like on top of this company like no tomorrow. He knows who's invested, how much they're invested in. Hayden, I wrote down everyone's price average cost basis if you want that information. So just have that 4% at 95.
Oh, now
better cost basis. Let's get this bread, boys.
I have Rob's. Oh yeah, I should put that in there. I have JC. JC's beating all of you.
He's at $10, right?
Yeah, he's at $10 a share.
I think he was memeing, but
no, definitely not.
No, definitely not. Yeah, he never memes.
He what is it?
We all have Rick at $69 a share. He has it at $6.90.
That's right. So you should have just bought CROX at $1 in 2008. You'd be fine.
Just
so easy.
There you
just
go.
like
highest.
Tesla.
McBuddha, you see the way he got it to zero. I know it doesn't make sense to everyone, but he bought my course on selling put options to buy stocks.
Oh, the course that doesn't exist.
That's how you know it does exist. It's just like it's mythical. It's like an incantation in Harry Potter. You got to do like a blood ritual sacrifice, and then it only presents itself to those whose heart are pure. So why Fuhat got my course.
Okay, so I'm I'm curious. Let's do a fun question. If we see something crack in CROX and we see a mass sentiment shift, how ugly do you think this could get?
I mean,
Hopefully, really ugly.
based on retail in general, retail can get really ugly. Oh, I don't think I'd ever told you guys about my one retail play that I didn't follow through till the end. And it's definitely a shit co. Victoria's Secret. Back in the day, it was called L Brands.
Yeah. Yep.
Now, looking back, it was a wild ride, but I didn't make and I didn't lose. I sold right before it rallied like crazy.
Oh.
But no, if you look at it now, I think they spun off into two businesses, and I bought it before spinoff. The ticker symbol was LB, L Brands. Now it's Victoria's Secret, along with Pink. I believe they're still together, and then Bed Bath and Beyond, Bath and Body Works.
Yes.
Which was their growth business, and then their cash cow was Victoria's Secret along with Pink, somewhat.
Yep.
So I'm not. I mean, all of my thesis was just simple. It's like this is like deep value. This is like post dividend cut, super deep value. Whatever. I chickened out, got out of it. But the point is, it got really ugly. Like it got stupid cheap. I think at its lowest, if I can't really recall if it was at a actual price to earnings basis of like 3, 4, something low like that. Can't recall exactly what it was. It was a while ago now. But CROX or retail in general is typically going to be more volatile in the lower side of retail, like not high-end retail, but the lower side of retail. And then on top of that, you have a large interest from retail investors who are very fickle. I think I made a comment at some point today, actually, about, everyone always says that they'll be that guy when things get ugly and no one's that guy. Everyone always shits on the stocks that went down a lot, or they get scared. So I feel like, CROX has already proven to you right there, like that was such a rapid drop from peak of 2021 to that trough. Like, what's the percent drop there?
73.
Yeah.
Blood for the blood god.
So do this. I want you to draw a dinosaur starting from that year and then end it at the current year. And that should tell us where the support is.
Maybe this is the spine, and then we're getting into the neck, and then the head's gonna go lower, but then it's gonna wrap back up. So we're getting into the dip of the neck right now.
Yeah.
And then we'll go to the moon.
I wouldn't be surprised at all if this kind of dips back down into the 80s, high 70s.
I think it could. That's what I don't know if it will get back to in the 40s. If that happens, I'm guessing something structurally changed enough to where maybe you don't want to be involved anymore. But I would not be surprised if it got into that 70-80 range.
Actually, back to your Victoria's Secret reference, Fabio. How would you have rated Victoria's Secret's management team at the time?
Horrible.
Okay.
Yeah, Lex Wessner had a bunch of scandals. He had recently come out of the scandal with when I invested, he wasn't really on the spotlight. It came out later.
Okay.
The Epstein scandal.
All right, because I'm not saying that worship CROX management team, but
you're saying
no. What I'm saying though is like they're giving a
implying.
clear, they're giving like a clear indication of this is what we think of quality. We care about margins, we care about operations, and thus far they've indicated that they're credible on that. Yeah.
I hope the management team doesn't go, we don't care about that. We don't care about credibility.
Well, there's a difference. There's a difference between caring and actually having a plan and executing a plan to see that actually carry out.
Because like it's real it's real easy for like some companies in the past to say, you know what, we want to be the biggest, we want to be this thing, and it doesn't relate to underlying the bottom line or EPS or certain other metrics. But, I don't know.
Yeah, no. That makes sense.
Yeah. Oh shoot! Is Hayden gone?
I think Hayden.
On the other end with retail socks, and we kind of saw this recently with the tech run this last year. They can go. We can get oversold on sentiment, but man, when it changes and it comes back, it can get stupid on the upside too.
No.
I don't know if that's going to happen with a name like this, but who knows?
Well, my concern is just like the debt. I just still, my one gripe is like, I didn't think they needed the Hey Dude acquisition.
Yeah.
Like, I think if they had done no Hey Dude acquisition, Crocs only, Crocs supremacy, and then just buyback, cannibalize the company. Share price would be, well, you probably wouldn't even have a buying opportunity right now. I don't even think you'd get that.
Yeah.
So
no, I agree. I think I mean that was my big concern back then. It's still like playing out. Yeah, I think honestly, I don't know if they would have bought the Hey Dude brand if they could have looked into the future and be like, oh, Crocs brand is going to be more than good enough, right? I think they were coming at it of like, okay, we can use this time to like diversify our brand a little bit, build something else out, have a little bit more, diversification across these two different product lines. But yeah, I agree. I don't know if it was needed. I mean, we might look back in like 2-3 years and be like, oh my God, I'm so glad they did that. But
I can see arguments for both. Like the reason for caution is warranted.
My biggest gripe, where I would probably be out of this stock faster than anything, is if they announced an acquisition in the next like 2 years, 3 years, I'd be like, just stop it. Just stop. Like unless it was like an obvious, like something like a Gibbets type thing, like where it's like stupid cheap, crazy high margins, and it goes really, really good with their current offerings. Like I do not want to get into a serial fashion acquire. That would be absolutely horrible, in my opinion. So
yeah, because most
shout out Capri.
Capri?
Yeah, Capri Holdings.
Oh, okay.
Yeah, shout out those people.
Yeah, because most retail is meh and fickle, and I mean Crocs is definitely like the higher quality brand here. I think there's no doubt about that, and so it's tough. It's gonna be really tough for management to keep quality high, knowing that they are probably one of the best businesses out there at their scale, at their size. In what they're attacking, which is lower cost shoe wear, comfort shoe wear, etc. Wouldn't Uggs be a high end? I don't know what Uggs are. I never bought Uggs. I don't know what the prices are.
Stylish boots.
I can see that.
Stylish boots.
Okay.
I mean, they have other offerings, of course.
They got like slippers though, right?
Yeah, they also have that too. But...
So Uggs is going to be higher end comfort shoes that are somewhat stylish, that were in fashion. I remember back in like the 2010s, and then I haven't heard about them.
Yeah, it's also different material though.
Kale says, make a great point. Why should an acquisition even be needed?
Yeah, no, I agree. If Crocs gets to the place where they are growing, just like I said, a little bit, and they're really solid on their margins and bringing in a ton of cash, and the market's still like, yeah, we're just going to trade you at a 10 PE, and they just buy back shares. Like that's all you need. At that point, I mean, just growth for the sake of growth is kind of dumb. in my opinion. You can have like a serial buyback machine, and their price is going to be doing really nice long term if their revenues and if their margins and if their product line and the brand line stays stable.
Perfect world, I wouldn't have necessarily been. I would have established a clear plan metric in which the company would buy back shares. I would probably not have done the Hey Dude acquisition. Would have focused only in-house, kind of like what M. Ladin says there, organic growth versus inorganic growth. If I wanted to start a new brand, maybe try to figure out or try a gander internally. Let's make a new brand, but not really seek out something else outside of the current businesses that we have, which again, I really like the Crocs business, like the Gibbets thing, that got me like, wow. But my only concern is quite literally the Hey Dude, but that's also the market's concern. I'm aware of that, right? Yes. I'm aware that the only reason why the price is here is because what they did with Hey Dude. So
yeah, these buybacks are rough, man.
Like
1 billion at 128 a share. Like 2020, I mean, obviously 46 a share, 24 a share. I mean, like hindsight's 2020, I guess, but that 2021 buybacks, yeah, like they could have kept all that cash, and their debt load only would have went up. Well, they probably used 500 million of that to account for the dilution they're going to do with the 450 mil in the acquisition, right? But they could have kept their debt about 500 mil lower than what they actually ended up taking on.
I love businesses that just do opportunistic buybacks, not blind buybacks.
Yeah.
It's like, oh, just buy back the shares.
So what type of structures do you like to see then when it's opportunistic buybacks? Do you like to see like, okay, we're trading at a yield of our cash flow at XYZ, and when we hit that level, we'll implement a buyback strategy to X percentage or whatever? Or
I prefer some sort of metric, like something that compares either your cost of debt or what projects are available to you. So like what is your current return on invested capital, return on capital employed, etc. And if subsequent investments yield lower and lower returns, then I would say, okay, well, how do we return cash back to shareholders? And I have two options: dividend or buyback. If my share price is high, and we can say, well, that's subjective, but that's the best you can do as a management team. Figure out a metric where you think your company trades at a very attractive price for your shareholders. And then if it gets to that price or below, opt for the buyback. If it's above that, opt for dividends, a special dividend. You don't have to do the committed dividend. I don't like companies go like, oh, we started paying the dividend. We can't do a special dividend. Plenty of companies just do special dividends and say, we have tons of cash. We don't know what to do with it. We have plenty of cash for operation. We have plenty of cash for growth. Our stock price isn't, you don't say that. You don't say our stock price isn't the best right now for buybacks. You don't say that. You say, well, we're going to do a special dividend.
So if your debt and your cost of capital is like, say, I don't know, like 5-6%, or 7%, and
7 maybe. 7's getting there. 7's getting there.
Getting there.
7's getting there. 5, no. 5's 6. That's pretty cheap. 7's getting there.
Yeah. So in that case, if the company's trading at like a pretty high premium, you'd rather see them probably pay back debt or pay down debt at a 7% yield than buy back shares.
There's also the phrase. I would say that part kind of depends. Maybe something like retail, yes, because since retail it can be fickle. You're de-risking a lot. If you can't go, it's very difficult. Not it's impossible. It's very difficult to go bankrupt with zero debt. It's hard. It's not impossible. It's hard. So
yeah,
if you're in an industry like retail, having zero debt and cash on hand, yeah, that's a pretty good position. You would at least reassure your shareholders, say like, hey, we're really healthy, we're really good, and then to be honest, I don't think the market would let that go unrewarded. So unfortunately,
Yeah.
after you're done doing that, your share price might not be attracted to the buyback.
And then you're doing dividends.
Then you're doing dividends. And then so maybe investors will be actually kind of quite happy to have elevated share price so they feel better and then they're getting dividends. All right.
But also it allows you to, build out your cash balance to take opportunistic, opportunities. If you see
Famous last word. No, I'm kidding.
if you see any, attractive projects or markets that you could get into.
Yes, projects market.
You could,
I mean, internal.
You could say acquisitions as well, but like
acquisitions with less debt. Because if the Hey Dude acquisition, well, the thing is also the timing. I can only imagine that if hindsight's 2020, literally, but if they had waited a year or two, I bet you the Hey Dude, they would have gotten a way better price.
Oh yeah.
And I think they should have. I only say this because at the time I felt this. So then but I know that it was the consensus was that, it wasn't notably priced. We're in a new era, right? We're in a new era. And so everyone just accepted that things were just trading at elevated prices. Private companies were selling for elevated prices in the private equity space. Everything was elevated. And so CROX was just like, this is just how things are now. We should pay X multiple. It's expensive, but we should pay it. Because they were really bullish. They saw Hey Dude's growth. I mean, I only assume, I don't know. We don't have access to that information. We don't have access to what their projections on Hey Dude's growth was for the next 5 or so years, right? We do.
Well, not the projections, but we had the history maybe.
Yeah.
Like when they acquired it, did they say, "Oh, we're going to buy this company, and this is what we think we can get the growth rate to"? And so, because that could help us figure out what were they pricing into their valuation when they were acquiring Hey Dude. Because if they had 50 to 60% growth at the time, and unfortunately, a lot of analysts or how some people do analysis, and that doesn't bar the management team here, is that they take recent historical performance and they extrapolate that and take it into the future a lot of times. Even though they're pros, they're still susceptible to that. It's very common.
Yeah, maybe they did a combination of some other analysis tools.
Yeah, they use
like
the
discounted
multiple.
No, discounted payback. Best model out there. Yeah.
Discounted price to book. Valuation. They use
I wonder,
a certain software.
I mean, there's gotta be something somewhere. I mean, we're running a little bit late, so we might have to cut it, but I would think, we could probably go back into previous financials from maybe around the 2022 time, Q1 2022, probably. They're probably going to have a big write-up on it in that investor deck. We'll do this real quick. We'll try to see if we can find anything. Other than that, I think if you guys have questions, post comments asking your questions. We're going to probably have to wrap up here pretty soon, though. And we'll see if my computer can survive.
I believe. There we go.
Yeah, I mean, dude, I really need to get a new computer.
Hey, dude, don't make it bad. Take a sad song and make it better. I hope this gets recorded. I hope a certain recorder person takes that and runs with it.
Oh, yeah. They'll get you.
Oh, they get everyone.
Well, even if we just get the guidance for Hey Dude, look, I think Hey Dude has actually shrunk within the brand since the acquisition. I want to say
for revenue.
Why did they buy it?
Well, no, I think CROX is growing so much faster. It's larger, right?
That's
so, like, oh my gosh. So why'd they buy it? You're exactly right. Why the heck did they buy it?
I have some like theories or thoughts that could explain it, but not 100% sure.
All right, gentlemen.
They bought it because it's ranked 9 in Piper Sandler's Spring 2022.
New York Times best-selling shoes.
Yes.
Talk about a brand premium. Okay, so 1 billion by 2024 is what they were saying, which that's probably, I'm guessing, not going to happen now.
That would definitely, again, explain a little dip in share price.
Yep.
Because that's basically a ding on management's acquisition, saying, "Hey, we overpaid."
So let's see. CROX. Is that's total revenues?
It'll go down. I mean, this is such a common thing for retail to do. I think recently No Brand just got a rating downgrade. They're the ones who destroyed. You want to look at a company that destroys itself doing empire building? Look at No Brands. Literally.
There was
What
another one.
Awful acquisition. But gentlemen, I'm so sorry I have to say this, but I do have to head out here.
All good.
No, you're good.
But it was lovely. I learned a lot about CROX, and it's on my list. It's on my list. I might put a little gander in it. The price gets down to without. I'm not going to do any further
70.
Nope, you said 80. At $80. All right, I heard $80.
No, just sentiment play it. Wait until everybody's crying.
$80. See, I can't put it up to the mic. Put up to the mic, not the camera. Go, $80. You already said everything you need to do.
No, but it looks like they were projecting Hey Dude revenue in the future at 20% plus.
Yeah.
Growth. So
yeah, that's what did it for them.
So yeah.
All right. I'm heading out.
All right.
Thank you.
Yep.
It was fun. Thank you guys for joining. It's good having you.
You didn't do the
on.
disclaimer. Didn't do the disclaimer.
Don't do anything based off of us. We're stupid people on YouTube.
Yeah.
Have a great day, and we'll talk to you later.
See you.